Hello, everybody. Welcome to 21 million. My name is Pete. Please take a moment right now to like and subscribe to my page. Smash the like, subscribe to my page, tell your friends, tell your parents, sit down the kids, whatever you got to do. Smash the likes. I got an exciting. I figured. I did a little research today, and I'm bringing some good stuff to the table. And I'm going to start off because it's my speculation. First off, I am I'm a bull at heart forever. I love Bitcoin. I love it. I talk about it all day. I look at it all day. The charts. I'm always reading the news for years now. It's just years. I've been in this since 2016, and it's every day. So in my heart, I'm a bull. I'm a 4-year cycle enthusiast. Okay? Just to preface, this is not financial advice because I'm a little bullish today. And so we're going to get into that. I did a little research and we're going to get into that. But first, let's go through the market. We have still at $1 trillion. The market cap, we have 24-hour volume is down at $28 billion. We have Bitcoin dominance at 42.3%. ETH dominance at 18.7%. We have Bitcoin's at 22,435. Ethereum's at 1564. We have BNBs at 288, under $300, but they're getting crushed with FUD like nuts, like that guy CZ. Woo, baby. We have XRPs at 36 cents. Cardano's at 33 cents. They've broken apart a little bit. They were pretty much the same at around 40. So maybe Cardano's a little oversold, possibly. Polygon's at $1.14. What a deal, what a bargain. We have Binance, not Binance, what am I saying? Binance USD is at $1. No shit. Am I allowed to say shit? I don't know. Sorry, YouTube. Like I've been saying, they're going to start burning the BUSD. When I first said it, obviously, I mean, it's just common sense. It's at 14 billion, and now it's at 8 billion. Solana's at $20, just under $21. Polkadot, $5.98. We have a Litecoin, $89, going a little past 10. Usually I want to keep it around 10. Pretty much everything is red, up a little bit, down a little bit. Nothing's really spectacular. We can take a look at real quick. I really don't want to take too much time on the market, the overall market. But last 7 days, we have some winners. Let's go to the 24-hour. So we have Conflux is up 10.5%. Maker's up 10.23. Nothing outrageous. Trust Wallet came down a little bit, down 3.5%. I use the Trust Wallet, so it's interesting. Let's take a look at the Fear and Greed Index. Still neutral at 47. And like I said on Friday, I figured it was going to come down a little bit. And sure enough, here we are. It is at 47. Yeah, so that's that. So I did a little bit of research on broadening wedges, which we are going to get to, and I think it's pretty bullish. I'm a little excited. I didn't really ever look into them thoroughly like I did today. So, but firstly, let's take a look at the charts. We're going to look at our roadmap to the halvening. Okay, pretty on pace. We are. Where is the? There we go. So we're underneath the 200 weekly moving average. Okay, we banged the head on it twice. We'll get in there nice and tight so you guys can see it real good. We banged our head on it twice. We came back down, and we're going to see what happens here. So let's switch over. So what I did was I pulled up a couple things here, a few different scenarios for everybody. So we're still on the weekly. Okay, switched over. We're on the Coinbase listing of Bitcoin. Okay. So this is what we have here. So I have another chart that I don't usually use. I use it sometimes. It is called the Trend Exhaustion, and that is by Trade Confident. Okay, they have a couple different, which I think I showed on Friday or Thursday, a couple different indicators. Trend Exhaustion, I appreciate. It's a good gauge of when the trend's exhausted. So right now on the weekly, the trend seems to be exhausted. It's at the top level. So this is the most important. Hold on, I gotta hide this stuff. Make that daily. A couple things on the weekly. So we have the bottom part of this wedge. This wedge right here is the most important, in my opinion. This is the one that we're going to want to stay within. And inside that, on the bottom here, this little box right here, is the CME gap. Okay, so what I did was I went over to the CME futures. I found the gaps for us. Okay, so the gaps here, 1, 2, 3. These are the three, two above us on the way down that we didn't close yet. And then the one below us, so these would be bearish gaps on the way down. This would be a bullish gap on the way up. That means that over the weekend, these are weekly candles, over the weekend the price had moved so drastically. The week of January 9th, when we had the big moves last month, 2 months ago, January 17th and January 9th, those 2 weeks, we had that weekend between the two, we had moved up significantly and we left a gap. Okay? So also, no, wrong one. So over here, we have another indicator, okay, that shows the gaps. Okay, this is by Lux Algo. So I got this from Tom Crown. Tom Crown's awesome. If you guys don't follow him on Twitter, or if you don't watch him on YouTube, he's got a bunch of shorts on there that it's great information. Great, it's free, and it's good stuff. So what we have here on this with the Lux Algo imbalance detector, it actually gives you the percentage of the opening gaps, how often they are filled. Okay? So with the bearish gaps on the way down, it is filled 84% of the time. Okay, but don't forget, we have two above us that still need to be filled. Okay, there's two right here, and these don't count. This one doesn't count, obviously, because it did get filled here. Okay, but these two are still open. So that goes towards the percentage. We're going to assume, obviously, being the bulls that we are, that this is going to go up and fill those two gaps. Okay, but the ones that we're really concerned about at this moment are the opening gaps for bullish moves. Okay, so on the bullish moves, it only fills it 74% of the time. Okay, so that means the odds aren't that great that we're going to fill this. It's not awesome. Okay, now I want to put into perspective. A lot of times what we do is we take things that work in stocks, in the stock market, and we try to apply this to crypto. And sometimes this works, and sometimes it doesn't. This is something that I'm going to go on board with. It doesn't work, okay? Because if we go and look at another stock, like, hold on, I'm going to flip over real quick to Tesla. And I really didn't have this planned, so I hope I'm right. Okay, bearish on Tesla is filled 96% of the time, and it's bullish 77% of the time. Okay, so on this particular one, the bearish ones are filled higher than they would on Bitcoin. So let's take a look at another one. I know another one that I was looking at was Costco. Let's take a look at Costco quick. So Costco, the bullish ones are filled 80% of the time. The bearish are 99% of the time. So my point being, it doesn't have to fill the bullish. The bullish gaps don't have to fill. And actually, now that I'm looking at it, my apologies. I went to the wrong chart. I just got wrong information. No, 84% bearish, 74% bullish. The numbers are definitely different. Okay, so let's go back to our chart here. So inside this wedge is that gap. So it is possible, according to the weekly, okay, so we're going to go down. We're going to step down. We're going to take steps down today. It is possible that we do come down and test the bottom of this wedge and also simultaneously fill that gap. Okay, we could fill it. We could fill partial. We don't have to fill the whole thing. We could fill partial amount. It doesn't have to be an entire gap that we fill, but it's possible. Okay, these I'm much more confident that we will fill these sooner than later too. This one's really not that far off. I mean, we're close to the 27 to 27, 28. And then this one too, I think once we're going to blow past this one, and this is going to be our next key resistance and support, this area. As you can see over here, we had a little trouble here without getting too technical with the Fibonacci's, but you can just eyeball it and you can see we found support in this area and then also some resistance trying to get back out when we had that mid bull market dump. So let's go down to the daily. Actually, I want to go to the 3-day. The 3-day is so optimistic. So, actually, I'm sorry. I'm bouncing all around again. Guys, you guys got to slow me down. So, on the weekly, let's look real quick at the market cipher B. We have the money flow hopefully starts to curl in. The weekly is really between this wedge and the idea that we got rejected here 2 weeks in a row and that we might come down and retest this. So it would put us somewhere around $20,000, like on the pinhead. And if we do wick down to close this gap completely, it would be somewhere around 19.5. Okay, so that's kind of it. I mean, that's bearish. Okay, it is what it is. We have the market cipher B. We have the red momentum dot up here. We have VWAP is cutting down. It looks like the money flow is curving in. Could we have why do I always have trouble with guys, I made such a mistake getting rid of my toolbar. So could we have an inverse head and shoulders right here? Could the money flow dip in? Could we go and hit that 19.5 and then bounce out? Seems like it's quite possible. Like I said, we have the red momentum dot here. The only bullish things that I really see I don't see really much bullish on the weekly, to be very honest with you. It seems quite bearish. Yeah, so let's take a look at the, I'm going to go straight to the daily. We're going to skip the 3-day today because there's a couple of things I want to look at and go over. Usually on the 3-day lately, it's been pretty bullish. You know, we have green, so that's why I like to look at it. But we'll go to the daily. And this is where it's going to get a little interesting. So so that gap that we were looking at is around 19.5. So around this area right here. This would be the bottom of the gap. Let me get the exact number so we're not playing games. Yeah, 19.582. Let's look. 19.545. 19.545. Yeah, that's good enough. So there we go. So that would be, just so we have an idea of where the bottom of the gap that would need to be filled would be right here, 19.545. Okay, let's make this another color. Let's make it red because we don't want to hit it. We kind of just want to never see it again after this run. Okay, so let's talk about broadening wedges. Okay, so we have this trend line, and we have this awkward, weird little ascending broadening wedge. Okay, and I did a little research on how they work. So the breakout point, or the second time it hits the top, okay, could be the breakout area. Okay, and it would be from that area, from the base of where the wedge started, the broadening wedge starts. Okay, so that would put us at about 25,924, which coincidentally, it would be the 20. That would be the area, obviously, that we would be having trouble, and then it would go the equal distance of that. So the base to where the second peak was. So this size line or arrow is the same as this one. Okay, and that would put us to a goal of 30,200. That's how an ascending broadening wedge works. Okay, so I was curious. I was like, let me go back and see if there's any other broadening wedges. So I went back, and we happen to have one. A broadening wedge. This one's a little bit different. So this is a descending broadening wedge. So ascending would be the bottom is higher. So you got higher lows, and this one we had lower lows. Okay, so it works fairly similar. This time with the descending, it works from the breakout point. Would be the target. Okay, so it would break out, it would test, and then it would send us to our target. From the base to the breakout zone. Okay, and it did. It sent us right here, and you could tell it went over a point, and you could tell it started to test on this area. We had the daily, so we spent a few days over here getting some nice support around 53.9, which seems to be a nice support area, because look here, okay, we might even this area right here. We could have banged our head on this area. This is a key area right here. So this might be, during the bull run, a target on the way up. It's something to keep into consideration. So you can tell right here, we got in bounce, and then the rest is history. We moved onward and upward. Okay, so just something to take into consideration would be this zone. This would put us at over 30,000, and then hopefully we'd find some support like we saw previously, and then onward and upward. Okay, so we'll see when this breakout is. And keep in mind, we were just on the weekly. So let's go back to the weekly real quick. If we break down right now, which basically we're on the support, if we were to break down, this is all garbage. If we break down, everything I just said is out the window. We start over. We got to find another pattern. But this is part of what I was saying, that we're taking things that work in the stock market, TA, and trying to apply them to things with cryptocurrency, which doesn't always work. But we'd like it to work, obviously. If there was a way to find out a bullish scenario in what we are looking for, what we are looking at, you come to me and I will show you a bullish scenario. Okay, so that's as bullish as I can get. What would be nice if we are going to go back, let's go back to the weekly. If we're going to go test this area right here, I kind of let's rip the Band-Aid off, drop down, crash out. Let's get this over with, close this gap, give us a nice fat wick right down, bounce off of that 19.5, and let's move. Let's keep it moving. I happen to think that we are going to replicate. So let's go back. I'm bouncing around. I'm just a little excited today, guys. So let's go back over here. Logarithmic. Okay, so let's go back to this halvening chart, and let's look back at our schedule. So we have this area right here. is 13,000. This happened in the summer. It happened in July or June. Let's say July of 2019. So this is our halvening point. Like I say, 75 weeks before, 75 weeks after, approximately. I think this one was like 76. The way that I have it set up here is 75 and 75. Okay, 75 weeks here, 75 weeks after the halvening, 75 weeks before. 75 weeks after, 75 weeks before. Put us to the bottom, puts us to the top. Halvening event, and then that's when we start to see those crazy moves. But I really want to talk about right here. This area right here. Okay, so this is right before the Litecoin halvening, and we had some movement, and we hit our head off the golden pocket that was created in the 2017 bull run. Off the peak of the 2017, we have this golden pocket here. We hit our head on it, obviously, come down. And in my opinion, this is March of 2020, and we have, obviously we know what happened, a little bit stifled bull run. But let's take a look over here now. So if this were to happen, so let's measure this out. From the bottom to the point that we hit that is 28 weeks. Okay, so let's take a look right here. Right here. Let's go 28 weeks would put us right here. So is this in the cards? So this line right here represents the same time frame that it took us last time to go from 3,000 to 13.7. And I'm curious. Let's take another look at something else. What percentage is that to the top right here? It's 341%. Is that a lot? So what kind of percentage do we have to look at to do the same thing? And I didn't do this before, so if it's similar, that's 200%. Okay, that's what it would have to go to. And that's to the base of the 213% to the base, which would be 48,000, to the base of the golden pocket that was set previously by the all-time high. So that's why when I say, 40,000, I've been saying 40,000 by May, which actually puts us June 5th. Yeah, 40,000. I'll stick with it. 40,000 by May. In May, we're going to hit 40K. And I think I put a remind me on a Crypto Savvy post. That guy, man, if you want to be depressed about Bitcoin, follow Crypto Savvy. He's the polar opposite of me. The guy's the biggest bear there is. Crypto Savvy. But I guess if you watch me and then you watch Crypto Savvy, it's probably somewhere in between is the truth. But I like being bullish. It's more optimistic. And I really believe in Bitcoin. So this is what you got. Let's go down to, so we did the daily. Let's take a look at the money flow. Let me put it to regular. Let's take a look at the money flow. And something else right before we went on, I saw something, another little bit of information. So we're in the money. It's dipping down. It looks like we are below the. It looks like we're going to put a lower low on the money flow. We're dipping down. No green dot yet. No momentum dot. We're still in the red from here. So change in momentum would be nice. Bitcoin, come on. Something I did notice though. So we have obviously. So I'm on the daily. We have obviously the trend line, an ascending trend line. And we have the RSI is actually descending. Okay. Oops, sorry. Descending. And then it totally breaks off. There's definitely got to be some type of divergence here because we are going straight up and a dip down here, and this is all whacked out. I think that we have a bullish divergence, a hidden bullish divergence here, because we clearly have ascending trend line, and this is on the trend exhaustion. My apologies. Descending on the trend exhaustion. And we also have descending on the RSI. What about on the on the momentum? Yeah, it's going to be descending. No green dot yet, but something I was showing a friend of mine last night, we have a green dot printed all the way up to 23 hours. So that's something to think about. Last green dot, obviously we had big movements at the top. Kind of looks similar. Let's look before. We had another green dot right here. Ooh, this is wacky movement right here. Look at this. This has got to be November. Yeah, this is the FTX. That's a dead cat bounce right there. Definitely a dead cat bounce. We had a green dot right here, and it did come down afterwards and go sideways. But this is the throes of the bear market. You know, this is in the red. You know, don't forget, on the daily, we're in the green. Oh, we're not. On the 23-hour, it's different. Oh, look at that. We're in the red on the daily, on the 23-hour. That's interesting. But on the daily, we're in the green. Wow, that 1 hour changes it that much. That's interesting, huh? Completely different. What about 22-hour? Yeah, it's all in the red. Wow. Okay. Hey, I stand corrected. We are on the 23-hour without a green dot. We have the 23-hour with the green dot. We're in the red. Let's see if there's any kind of divergences here. Divergences. So we have, same thing. Yeah, this is ascending. Ascending. And then on the RSI, no, it's ascending on the RSI. See? So no. On the 23-hour, it's ascending, and they're both ascending. On the trend exhaustion, it's pinned at both times. What about the... no, it's ascending. So we have a... Well, that's really bizarre. So on the daily, we have a bullish divergence with the price action. We have it on market side for B with the momentum. We have it on the trend exhaustion, and we also have it on the RSI. And then with no green dot in the money, and then the 23-hour, we have a green dot. We're in the red, negative money, and no divergence. That's interesting. Down, yeah, no. Something to think about. Let's take a look at the 4-hour. Yesterday I was looking at some plays. So the 4-hour, we had that green dot already. Actually, green dot here. Obviously, we rallied. I wonder if that other spot. So over here was the other one. We had a green dot. Yeah, we had a green dot here, obviously. And then we printed a trigger wave. This trigger wave moved this up. Over here, I had went into a play around this area and didn't pan out. But the money flow was also curving in here. And it wasn't really, I don't remember. I waited for this. Yeah, not really. It wasn't that good. What do we have here? So it's possible we could get a nice little trigger wave over here. Maybe this does come down and reconfirm. You know, maybe we do bounce off of here again, and we get a nice little trigger wave, and we can move up. Might be nice confirmation then for that daily, the 23-hour bull dot, and also the full day bullish divergence. If we get a nice little trigger wave on the 4-hour, might be nice. Not financial advice, but maybe keep an eye out for that. We have over here, so this gap, obviously we want to fill that gap. You know, I'm still bullish, guys. Still bullish. So on Friday, I went into a play with in the stock market, and not a stock market guy, and I didn't get crushed, but I lost a little bit. But because sure enough, something we want to keep in mind, obviously, is the inflation, 10-year bonds. The higher the rate with the bonds, the higher this rate is. You guys can't see anything. The higher at least I didn't, usually I let you guys sit there before noticing. The higher this rate is This works against us. This rate goes up, stock market goes down, crypto goes down, this goes down, stock market goes up. Okay, so we had a high of over 4%. This is the 10-year bond yield. Okay, and then this is on the 4-hour. So yeah, so this was on the 2nd, the 3rd. We started to come down. So on the daily, look at the daily here. This is Friday. Yeah, this is tomorrow. It didn't open yet. Yeah, right here. So we came down on Friday, and that's why the stock market had a nice little pump. Something to keep in mind this week coming up. Also, we have, where am I? Yeah, 1, 2. Yeah, this is it right here. So we have the S&P making a nice little bounce. Let me take this out, I'll go off. And also going over the 200-day moving average. So this line in here is the 200-day moving average. It blew over it, okay, which we want. We wanted to have confirmed a breakout. So confirmation would be coming out of the falling wedge, confirming, moving out, going over the 200-day. On Market Cipher B, we have the VWAP pointing up. We have momentum dot. The only thing that I see here, the money flow is kind of coming down. Now, we don't have to spend a whole lot of time in the red. We don't have to spend any time in the red. It could be something like this. See this? Back in 2021, November 2021 was probably peaking. It could. What was it, November 2021? Yeah, in this area right here. Just a little bit of red, and we can go back into the red and get flush and get some movement. I think this is a good spot with the bonds, the rates coming down for the 10-year bond yield, and also confirmation of breaking out of this wedge and over the 200-day. Bullish stuff. Let's take a look at the dollar. Now we want the dollar. I got all kind of, my shit's a mess over here. So we want the dollar to crash. We want it to come down. On the daily, I see a, which it even could be something like this. We could be out of it right now. I mean, not really. Really not confident about this wedge. Yeah, not really. Possible rising wedge. Rising wedges come down. So rising wedge comes down. Come down. We want this to come down. Okay, so something to keep in mind. Possible. Okay, when the dollar pumps, assets come down. Gold comes down. Stock market comes down. Bitcoin comes down. We want this to come down. We want the dollar to come down. A nice area for the dollar is around that $100 mark. You can see it had a nice hard bounce on it here. A little resistance getting past. And then even in this area, you can see that it was its test. So I'd say it's probably over here is our level. No, what did I do? No, I don't want a voice service. Okay. So this would be a nice area for us to bounce. 101, it looks like. Not bounce. We don't want it to bounce. We want it to come down and then crash. It would be nice if it came down and if it went down. We need this to come down. So keep a look at DXY. And it looks like it's in the red. VWAP is down. And let's look at the weekly. Let's get a bigger picture. Let's turn Market Cipher A on. I never did this. Yeah, nothing really. Let's shut that off. So the 200 weekly over here, be nice. Oh, look at that, look. So the 200 weekly kind of is in that area of the support that I had said that it found. Broke out, nice big breakout, confirmed, moved up. price discovery, as they would say. Here we had a test, so maybe we come down and break through it. I think it's going to take some time, though. I think it's probably going to coincide with the 200 weekly moving average crossing. I think that's going to be a thing. And then we would see, hopefully, something like this, a breakdown, and then losing some power. Over here, you see the same thing. Over here. So over here, it got rejected to go back in, get rejected again. Finally went through a little bit. So something to keep a look at. So guys, make sure you like and subscribe to my channel. Let me know what you think down below. And follow me right below right there. Where is it? This way. Yeah, 21 million. Follow me on Twitter. I'm always posting stupid stuff. And I will see you guys on tomorrow. No, tomorrow I won't be here. I won't be here tomorrow, but I will be here on Tuesday at 9 a.m. So have a good night. Have a good Sunday. It's going to be a busy week. And hopefully we get some green candles.